Will gold prices drop further? We had hotter than anticipated US CPI figures, meaning a lot of traders are now anticipating that the Federal Reserve are not going to cut rates as soon as was expected, and that has increased the US dollar strength. We've been talking about this for the past few weeks on the channel, and now gold has broken through January lows. So let's go check out gold prices right now. We can see that we were trading in this daily range between the highs around about the $2,060 level down to the $2,004 level. US CPI yesterday came out hotter than expected. We breached that low now, and now we're trading below the January lows, meaning that we could see price come down towards the December lows, down towards that 1980 handle. So how can traders look at this for potential opportunities? Well, two opportunities I feel that could come or arise from this type of situation. The first is to wait for the market to retrace slightly back to a key resistance level. That one resistance level could be the 2004 January lows. If price approaches this level and fails to break back above it, then we could see a rejection and the market head down towards these December lows. The second way we could look at a possible opportunity is by diving into lower time frames. So if I just go down into the 30-minute time frame here, I'm just going to expand this out. We talk a lot on the channel about the market finding areas of accumulation and then breaking out. Now you can see here price is evidently forming an accumulation as price kind of continues to drive lower here. Now the thing is I like to identify is the highs of the accumulation. The reason being is because this would be where volume begins to pick up and then lower volumes are above this area. Okay, so you got to think of it as the market drives lower, consolidates, potentially drives lower again. In these consolidation areas we build up volume, okay, and that high volume is an area where buyers and sellers are doing lots of business in the market. In the low volume areas, like the sort of areas where you see the market kind of expand very quickly, that is low volume. The market travels through these areas very quickly. There's basically no real sort of buyers or sellers stopping each other at this point. And obviously in the case of gold yesterday and the US CPI, buyers were not standing in the way of sellers at that point, and we saw this low volume drop. So we have low volumes in this area here, we have higher volumes trading within this area here. If the market comes back towards the highs here of that sort of pocket of high volume, then this could obviously be an area of resistance. If we breach that, the market may trade higher back towards the 2004 area. If we hold in this area and sellers start to appear again, then it could mean that price is dropping down towards those December lows. Now again, how can you look at that from an opportunity point of view? Well, the thing I would look at is for the market to start failing to make higher highs. If price comes back into this area here, it's going to break through these highs from the minor resistance levels. So I need price to fail here, maybe form sort of a double top pattern, head and shoulders pattern on these lower time frames. Anything to suggest that buyers aren't willing to push price past that point or sellers aren't willing to give up that level, then I expect the market to potentially come down towards that 1980 December lows. So hopefully you enjoyed that little bit of analysis there. If you did and you're new to the channel, hit that subscribe button and I'll see you in the next video.